Hello, traders and investors. This is CurrencyNet. Today be we are going to do a quick trade review on a trade setup that we posted. I think it was on the it was on the third 23rd of May. Yes, 23rd of May. We are looking for shorts, and the title was "Gold is starting to look heavy." Because if you notice, let me just pull up something real quick. Let me pull up this gold chart here. If you notice, for some time, gold was trading higher. Just making higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. But our but what I noticed was that gold was now uh, failing failing to trend cleanly. You know, if we notice something technically, the market was beginning to transition from expansion into distribution because it was unable to reclaim higher liquidity while continuously respecting lower highs, suggesting that bull momentum was fading, and sellers were defending that 4550 region, and we were looking at shorts or targets at the much low was this one here, right here, that we just cleared right now. um and fundamentally, we there were fundamentals which were supporting this idea. We all know that gold thrives in uncertainty: rate cuts, fear, currency weakness, geopolitical stress, and bank instability. But the market was slowly shifting away from those peak fear conditions, because when in terms of um, economic stresses like inflation, investors put their money in gold because it is not really affected by inflation. Even in terms of war, in terms of conflicts, people and investors put their money on safe assets like gold. you know um okay, and it's fundamentally the US dollar tends to suffocate the gold rallies. I don't know if the DXY, this is the dollar index, when it strengthens while yields remain elevated, gold can quickly lose momentum. And when positioning becomes overcrowded on the long side, even small shifts in macro sentiment can trigger aggressive sell-offs. And that's where liquidity becomes important. The much low was sitting below current price like a giant pool of resting liquidity waiting to be tested. From a delivery perspective, the drop beneath current structure simply looks cleaner than continuing higher. We were looking at that 45500, that bearish invalidation which acted as resistance. This is it right here. It was from this high here. Notice how price went on that high, how it reacts. Because another thing that is important to notice is that we do not really care about opinions. We care about the reactions that the market is doing. Correct. Whether people believe that the market will trade higher, that's just their belief. But we do not act on belief. We act on statistics, numbers, you know, and those price levels. And that 45500 was that resistance. Let's just see how it played out. Let's see how it played out. um yes, you see how it played out. The market went to our targets. That 4550 acted as resistance. See how it gave us a clean retest there, a clean retest there. Then we came to retest that 438100 level. That 43810 was the immediate draw on liquidity. And that the liquidity pool, this was the liquidity pool right here. See, so we came from that liquidity pool on a higher time frame. Let me just show you how on a higher time frame, this that looked like, this is how it looked like. This was the liquidity pool. See how price reacted to that liquidity pool and just came down. But when we were making this analysis, the market was already at that 4,500 level. The opening gap that we can gap, it pushed prices higher, but for the whole week it traded just down to retest that immediate draw on liquidity, to go back and retest that 4500 resistance, you know and price just came to that much low. That was our target right there, and the target was met. So this really didn't it wasn't it was really a tough call to me, because prices was the gold prices was going up, even in terms of the conflicts in the Israel war. People were looking like, okay, no, hey, gold is a safe haven, like it will continue going up given the current fundamental conditions. But the other interesting thing was that we were taking confirmation from the Euro USD, from the Euro USD, because on the Euro USD, let me see, yeah, gold. We are looking at technically both the Euro USD and the gold. Both charts were showing similar behavior: rejection from higher liquidity, failure to sustain higher prices, and the momentum beginning to weaken. Gold was struggling beneath premium liquidity, while targeting lower liquidity towards that much low that I was talking about. So these are just different charts, but the same micro pressure, you know because look at how the gold trade was. I mean, the Euro USD, it was playing out, so on Euro USD, we still haven't reached our targets, but we still have short targets either way, because that's the daily chart. you know um that's just it for today's trade review. This is how it is. Yeah.